Let's actually map Asian markets, and I just want to establish one very differentiated point here, which is that if you look at the YTD crack for Dow and emerging markets and the YTD crack for Indian markets, we are massively underperforming this fall. Are we likely to lead this fall, or are we likely to outperform in this fall? Now, how do you judge that? Well, you look at what is the reason of fall. The reason of global fall is because markets are worried about global tariff war, which could have an impact on global growth. Strong global growth was the key highlight for 2017 rally because global growth was strong in US, Europe, and in China. Everyone thought that 2018 will be a grand year for earnings, and that assumption seems to be changing. But Aisha, on the flip side is that if global growth will come down, that automatically will have an impact on inflation, and that automatically will have an impact on how cost of capital is going to move. So a Goldilocks scenario, Aisha, is such where growth is strong and liquidity is strong. And the realistic scenario now is that if trade wars kick in, then cost of borrowing will not go higher and the liquidity in the system is not going to dry up. Today markets will not believe what I'm trying to say because the sentiment is bad and there is going to be a bit of panic. But mark my words, if tariff war accelerates, Aisha, fear on inflation will come down and US bond yields will start getting addressed. When will this start? I don't know. Today we'll talk about trade war, but we should not ignore the economic reality. If trade war starts, it will have impact on global growth, and then all central bankers may not really adopt to a tightening policy.
Yeah, let's chat about that point. Rakesh Arora joins in on the show right now to talk about where this entire scenario could be headed. Rakesh, do you think this is the last piece of bad news that we wanted for an otherwise brittle market like India? This is definitely going to see a very sharp reaction for Indian markets as well, because while our exports may be very minuscule to the US, and up until now, the tariff war seems to be playing out only between US as well as China, but purely because of the market correction playing out in Asia as well as US, that's bound to impact us as well because we're not decoupled.
That's true. I don't think Indian markets are decoupled in any way. FIs continue to hold more than 20% in Indian markets, and that's kind of almost 50% of the free float. So any changes in FI's buying pattern really impacts us. I think Nikunj was making a good point, but on that I just want to comment that if it translates into trade war, there will be other things which will happen, which is like China selling the US Treasury, which can increase the inflation in US quite a bit, and also push Fed to increase interest rates. So trade war is not an acceptable situation, and personally I don't believe that we are on the verge of trade war. I would still say it is posturing. Even the steel and aluminum tariffs which were imposed, they left a lot of loopholes, so the actual impact is not there as much, and I'm hoping that when they try to do this $50 billion import restrictions, it will also have a little bit of leeway left out.
Okay, we'll talk about those leeways and those loopholes some other day. But